All right, welcome back everyone. This is your day 133 health report, and wow, we've got a lot to cover. The rally is still going strong. The vault is this close to a massive milestone. Bonds are picking up steam, and, this is the big one, a huge shift in the protocol's release schedule kicks off today. So, let's just dive right into the numbers.
But you know the drill, we gotta do this first. Quick reminder, this is all for educational purposes. It is not financial advice. Crypto is a wild ride, so please always do your own research.
Okay, the big headline for day 133, another really solid move up. We're looking at a 6.9% gain for PLZM as this rally just keeps on chugging along.
And listen, this isn't just a one-off spike. This rally is really starting to build some serious momentum. You remember that massive 14.8% jump on day 13, right? Well, after a quick breather, it looks like we're firing up for a second major leg up.
And when you add it all up, the effect is pretty powerful. I mean, just over the last 3 days, the price has shot up from around 3.3 cents to nearly 3.9 cents. That's a total gain of nearly 17%. Not bad at all.
So, the big question is, what's behind all this? What's fueling this rally? To figure that out, let's dig into the fundamentals, and we have to start with the heart of the whole protocol, the vault.
And wow, look at this. The vault is now sitting at 196.38 ETH. After that incredible surge over the past few days, it's not just recovered, it's now back over $400,000 in value. That is a fantastic sign of the system's underlying health.
But here's the really exciting part. We are literally knocking on the door of a huge psychological milestone. I mean, at this rate, we could see that 200 ETH level get smashed in the next day or two. That would be the highest it's been since the big crash recovery.
All right, next up, let's talk about the engine that powers all that vault yield, the bonds. And what we're seeing here is a serious acceleration.
Get this, a whopping 94 new bonds were added in just the last 24 hours. That is one of the strongest single days we've seen in weeks, and it just shows that confidence is growing. People want to lock into that yield engine.
And this crazy pace puts another milestone right in our crosshairs. We are just 34 bonds away from crossing 8,500. And you know, every single one of those adds to the system's ability to generate that perpetual yield.
Okay, so we've talked about asset growth. Let's switch gears and look at the supply side. How is the token itself being protected and secured?
Well, check this out. When you combine all the staked supply, the liquidity pool, and the tokens that have been permanently burned, a full 3/4, 75% of all PLAZM is basically locked up, off the open market. That creates a really strong foundation of support.
And speaking of burns, another 20,000 tokens were just vaporized today. That brings the total number of PLAZM permanently wiped from circulation to over 1.3 million.
So this puts us at 19% of the total supply burned, and we are closing in fast on another huge milestone, 20%. Just think about that for a second. 1/5 of every single token ever created just gone, forever.
And of course, none of this would be possible without the yield engine doing its thing. It just keeps performing. Another $1,077 in profits were claimed today, bringing that grand total to over $76,000.
And that profit has allowed the defense system to deploy nearly $60,000 in cumulative USDC to support the price and build up liquidity. Yeah, we're just about to take over that 60K mark. Okay, now for what I think might be the single most important piece of news today. Today marks the official start of the light phase for token releases. And folks, this could fundamentally change the entire supply and demand dynamic on a daily basis.
Just take a look at this forecast. Today's release was already pretty light at 49,000 tokens, but now, look ahead to days 136 through 140. We're about to enter what you could call an ultralight period. Releases are going to drop to an average of just 16,000 tokens a day. And bet this, day 139 will see a record low of under 9,000 tokens. That's just tiny. So, what happens when you put these two things side by side? You've got this consistent buy pressure from the yield engine versus this dramatically lower sell pressure. Well, the math gets really interesting. The protocol's buy, burn, and build system is cranking out about $1,000 a day, while the total value of those new ultralight releases is only around $624. So here's the bottom line, the crucial point.
The daily yield from the protocol's own defense system has the potential to cover 160% of the potential sell pressure from new tokens during that ultralight phase.
What does that mean? It means, for the very first time, we could be entering a period where the protocol's own organic buy pressure is actually greater than the new supply hitting the market each day. That's potential net buy pressure territory. This is a potential game changer.
So, let's pull it all together. What's the final verdict for day 133? I think it's a clear picture of strengthening momentum, with a whole slate of major milestones sitting right on the horizon.
Let's just run through the scorecard real quick. Rally? Check. It's on. Vault? Approaching 200 ETH. Bonds? Barreling towards 8,500. Burns? Almost at 20%. Deployed USDC? Nudging up against 60K. And the big one? The light release phase has officially started. It is green across the entire board.
6.9%. 2 rallies in 3 days, a vault at 196, approaching 200. Bonds at 8,466. Burns at 19%, approaching 20. And the lightest release phase in the history of the protocol is starting this week. You know, when yield exceeds sell pressure, the math, it just changes. Day 133, the milestones are all lining up. And just as a final reminder, this is not financial advice. Cryptocurrency investments are inherently volatile and high risk.